Hello everyone and welcome to the Spotlight webinar. I am your host Richard, and today we're going to be taking a look at how to use Spotlight forecasting, a getting started guide. Things we will cover today is setting up a new organization in Spotlight forecasting, working with the task manager screen, importing data to your forecast, flexing the budgets, and some profit and loss forecast rules. So let's go ahead and jump straight in here. Now, for those of you who joined me in the introductory for Spotlight reporting, you'll notice that we have our organization here. Now, let's say, for example, we'd want to start preparing a forecast for the organization. How we would do that is clicking on the forecast tab here. You'll notice that there are no current organizations. So first thing we will do is add an organization. Now let's say we would like to produce a forecast for the existing organization in Spotlight reporting. So I'm going to add that in here. Now you'll notice this handy little drop-down box here, bringing up the existing organization in Spotlight reporting. Clicking on the organization's name, you'll notice we have a little message denoting that the organization will be linked. So very important when you're adding your organization in different Spotlight products that you link them together. So now we'll go ahead and add the organization. And what we are taken to here is our task manager screen. I'll just go back to the main landing page here. You'll notice that our organization exists and we have tasks for each forecasting tasks. So if I go to my task manager here, we can select either our blue budget task, which will create a profit and loss budget. We can select our purple forecast task, which is a full three-way forecast. And we can select a orange scenario, which can be based on either task or of its own. Important to mention that we can use either one of these as a standalone. So perhaps we might like to skip the budget task and create a three-way forecast. Or perhaps you'd like to create your budget itself and that's it. That's totally fine. You can do that by creating the tasks. For today, we're just going to create a forecast task. But before we do so, let's jump back to the main landing page here and look at some of the forecast settings. So we have our practice settings here and our organization settings. So important to double check the end of financial year date, particularly for the organization. Make sure that's in line with your accounting system. But let's go ahead and create our forecast. So what we've presented here are the forecast settings and the things that we'll need to look through before we get started in adjusting our forecast. So first thing we'll do is enter a name. Let's say we've got our name there. We'll scroll down a little bit here and you'll notice we have a forecast from date and a forecast to date. So this is the overall date range that you're wanting to forecast upon. with actuals showing until your selected date. So we can forecast from April 18 to March 19 and have our actuals showing until June. Of course, we could roll this back if we wanted, but this box here will denote when the actuals will show until within your overall forecast period. Scrolling down more here, we can see a few other options. We have our sales tax basis, between payments and accrual basis, and sales tax schedules. Now, the schedules are unique to Spotlight forecasting and help drive some of the journals and cash flows in forecasting. So we can select our schedule for this organization. Hovering over the little eye icon lets you see the activity month and the payment month for this particular schedule. The same thing applies for the payroll tax schedule. And then employer tax schedule. These schedules can be found in your practice settings. So we'll take a look at that really quick. So we'll go back to our main landing page. We will click on our settings and we'll go forecast schedules. We can select the country that we're working in, and that will be based on the organization's reporting currency. So for a New Zealand entity, these schedules will be available. Of course, we can create our own and choose the payment months for the activity month. Let's go back to our forecast. Set our date range. Set the month our actuals will show until. Select our GST or sales tax basis, and then the schedules. There's also an option here to show the cash flow as either tax inclusive or exclusive amounts. So these are the forecast settings. Once we've run through those, we can select our data source. So we can manually enter, or we might choose to use our accounting system. In this case, I'm going to select 0. We will be redirected to 0, asked to authenticate the connection, and allow access to Spotlight. So we can now start importing. So I'm going to import my actuals to June to match our show actuals until date. And then I'm going to import my budget to the end of the forecast period. Worth mentioning here that the budget we do import is the overall budget in Xero. So best to make sure that your overall budget matches what you're wanting to flow into Spotlight. And of course, it is a one-way connection only, so we won't push data back out to Xero. It only flows in from Xero and our other data sources. So we're importing actuals and budget here at the moment. And then we can look at the data to use in our forecast and then get started in making those adjustments where needed. Worth mentioning that Spotlight forecasting is designed to be a double entry forecast, meaning adjustments made in the forecast will be double entry. and that's partly due to our forecasting rules, which we will see in just a moment. Right, almost complete here. Great, now we can continue. So we've set up our forecast settings and we've connected and imported from our data source. Now what we need to do is select the data to use for our forecast. We can use our imported budget as per 0. So for those of you who already have an overall budget entered in Xero's Budget Manager, we can pull those values directly through. Otherwise, we can use last year's budget or last year's actuals. Last year's actuals is a great starting point for those who do not have an overall budget available. But for this demonstration, we'll use the imported budget. Now we have our forecast settings, we can save and continue. And our forecast will populate. You'll notice here a nice history log, letting you know the actions you've taken in the forecast. And because Spotlight Forecasting updates dynamically, we need to refresh after each adjustment. So we have our profit and loss, our balance sheet, and our cash flow, and the various sections for those. Expanding the revenue section, very similar to Spotlight reporting, where we have our account name, report code, and display name. But we also have a sales tax column and a rule for each account. So let's start looking at some of these rules and adjusting some of the values in Spotlight. So our tax column here is any sales tax on the items, the values that show in the customized data grid being GST exclusive. So the sales tax amount will be applied to those values. With the payment timings, of course, remembering that these are accrual entries, the payment timings being determined by our forecasting rules. So if we click the default revenue rule, you'll notice that we can select the payment timings. So for those accounts that are paid 100% in the current month, we can go in here, adjust that so the total equals 100. And for our accounts using this rule, the cash flow we will see 100% in the current month. So this is where we can adjust the cash timings for our receivables. Saving that in there. What will show on our cash flow will be 100% in the current month. Of course, if we did know that perhaps our project revenue was received with a different timing, we could add a new rule here. Select our account, so let's select our project revenue, and perhaps this one was 50% in the current, 50% in the month after. Making sure that we've got the rule applied just to the one account, we can run that there. So now what we will see in the cash flow is 100% in the current month for our product revenue and support revenue, but 30 days, so 50% in the current, 50% in 30 days, according to our rule here. Moving along here, we have our cost of sales section. Again, a very similar setup here with our default cost of sales rule for the payment timing of our payables. You'll also notice here that we have a wages rule. The wages rule in Spotlight Forecasting allows you to adjust the liability or the recognition of the liability for your wages expense, including PAYE, any KiwiSaver there as well. So let's do that. Just for an example, we'll run through here. We'll enter our gross wages and our net. So let's say, keeping it really simple here. Here I will be able to select the liability account for my wages payable and the payment timings for that. And I can select the account for any PAYE, so that's the liability account, with the cash flow being determined by our schedule. Of course, I might want to come in here and add some KiwiSaver in. So let's select our KiwiSaver account. Let's put in an amount here, 4% of gross, and we'll select our liability account. Now you'll notice here that we have a schedule appearing, and that will be based on our forecast settings. So that allows us to automate some of our entries for our wages. So perhaps now we might want to look at entering some forecast values for our direct wages, if we did have them. This can be done by simply clicking on the cell and then entering a value. But we can also click on the cell and then click this little equals plus icon to bring up our adjustments menu. So we can apply an adjustment to all months in the forecast by a date range or by an amount each month. We can adjust by applying a fixed amount, adjust by an amount each month. So we can say the previous month or previous year plus this adjustment, or the existing value plus the adjustment. We can adjust by a percentage, so previous month plus a percentage adjustment, existing value plus a percentage adjustment, or as a percentage of trading revenue each month. For this example, I'm just going to use the fixed amount. And you'll notice there that each month in our forecast now has the fixed value. Of course, if I was wanting to adjust multiple accounts at once, I could use this button here, adjust cost of sales account. Now instead of just the one account, I have 5 accounts selected. So I could maybe exclude my direct wages here, and I could start making adjustments to the forecasted values as needed. So let's say I wanted to increase my existing budget figures by 5%. I could do that by adjusting by a percentage each month on top of the existing value. This will apply to the 4 accounts I've selected. Of course, there is an area to put in commentary about the adjustments you've made. So you'll notice the adjustments being made. Now we'll refresh our profit and loss. You'll also notice here that an entry has been created in the audit history. This way I can see what I have done on my forecast. Let's take a look at the expenses section here. So we have our expenses, their report codes, display names, and their sales tax, and a couple of different rules here. We have a exp.dep, our depreciation default rule, as well as one for our wages account. The handy thing about the depreciation rule is the depreciation expense entered here. I might like to do that here. Let's say apply an amount each month. That's great. So the expense amount here each month can be posted to the accumulated depreciation account for your fixed assets. So if I look at this rule here and select next, what you'll see is a percentage amount. So perhaps out of the 12,000 in each month, 40% was computer equipment, 40 was motor vehicle, and 20 was office equipment. So that will post journals to the depreciation or the accumulated accounts for the various fixed assets we have. Of course, being able to adjust the payment timings for our expenses account. Now let's say my advertising, for example. I currently don't have any values in here for my budget or my forecast, but I know that it is going to be a certain percentage of our product revenue, for example. So I can use our dynamic rules feature to build out a formula to automatically populate the accounts value based on certain conditions. So my advertising account, I'll select that, auto to auto. So it's going to do the entire forecast, and then I can start adding accounts. So let's pick up an account by name, our product revenue. Let's multiply that. Let's say we know it's going to be 20%. So now whatever my product revenue values are in my revenue section, 20% will be posted to the advertising expense. I can see that coming from my dynamic rule. Of course, if I had budget values, they would be showing here. So the overall advertising expense would be the dynamic rules plus whatever original values I had in the account. So a great way of being able to flex your budget based on other accounts or other factors. So for example, my commissions, perhaps they were $500 each month. And then a bonus on top of that based on the overall revenue that month, perhaps. We could say, let's choose our trading revenue, and then let's say 5%. So now what shows is the $500 base and then the values from our dynamic rule. Of course, you can see our employer contributions is receiving journals from the wages rule. So anywhere you see the little journal icon, you know that there are journals posting to this account from somewhere else. The last section we have here is our net profit and tax expense section. So the net profit in our forecast being calculated by our revenue, cost of sales, and our expenses sections above. And then we can use our income tax rule to, as we can see, calculate the income tax with our entered income tax rate. We can also allow for any losses brought forward from the last financial year. We can also allow for any non-deductibles. So perhaps I'd like to adjust and take out my non-deductible entertainment. You'll see that there. We've got our net profit, our adjusted. In the month of July, it's being adjusted by $112. And then when there is a month of profit, the tax expense. Now this expense isn't directly paid, it's posted into the income tax liability account, which if we pop over to our balance sheet here, our liability account, we'll see an income tax rule. So you'll see here we have a tax expense relating to July. Any payments of your income tax or any prior tax payments must be manually entered here. The only automation is with the recognition of the monthly tax expense. Now we will look at the balance sheet in greater detail in our advanced session, so be sure to stick around for that. But I'll just show you our cash flow forecast for a moment here. So remembering our profit and loss in our revenue section, our trading revenue rules, current month 100%. This rule applies to our overseas product and support revenue. So in July, we should expect to see 9,594 for product revenue. Of course, this does depend on our receivables rule as well. But the general gist is the profit and loss rules dictating the payment timings, the outstanding amounts being posted to the receivables or payables account, and the cash flow impact accordingly. Right. So that's a brief overview of how quick and easy it is to create your organization in Spotlight Forecasting, input data, flex the values in the forecast, use the rules for the profit and loss here to post through to the balance sheet. Now that we have customized our forecast, we can look at the Customize Layout tab. And it does look a little bit different from Spotlight Reporting, where we have our report filter drop-down box. So if we select our forecast task and apply the filter, the report pages will be generated according to that task. So you can see here we have an assumptions page for our forecast, a notes page, and then our profit and loss, balance sheet, cash flow forecast, as well as a few chart pages as well. So of course we can adjust and customize how our report will look. Perhaps we'd like a detailed profit and loss, that sort of thing. We can set that here. Very similar to the customized layout options in Spotlight Reporting, except we don't currently have an option to add new pages to your forecast. Once you've customized how your report will look, you can preview it here and then complete. So here we can email our forecast direct, present it online, or download a PDF copy. Of course, from here, we might look at creating scenarios based off our forecast and then flexing further. But for this session, I think we've reached our end point. So the things we did cover today, we're setting up a new organization, working within the Task Manager screen, importing data into your forecast, flexing the budget values, and the profit and loss forecasting rules. Now, as I mentioned, we will be covering the balance sheet rules in greater detail in our advanced webinar. So please make sure that you join me for that one. Otherwise, thank you all for joining me here today, and I'll see you again next time.